Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY edged higher as investors remained cautious amid ongoing uncertainty around the Middle East conflict. The dollar had previously strengthened on soaring oil prices, but the comments from President Trump suggesting the war with Iran could end sooner than expected pushed oil prices lower and reduced some of the safe haven demand. Iran also rejected those remarks and vowed to continue blocking the Strait of Hormuz, keeping the markets on edge. Technically, the US dollar index has pulled back from 99.7, which was the high, and is now testing the psychological level of 98. Momentum is weakening with the MACD histogram narrowing. A break below 98.39 could expose further downside towards 98, while a move back above 99 may reopen the path towards 99.7. Next up, let's have a look at crude oil. WTI is trading around $89 per barrel after sharp volatility this week. Prices fell down to around $76 on Tuesday as expectations of a quicker end to the Iran conflict eased supply concerns. Geopolitical risks remain elevated as markets assess damage to energy infrastructure and potential policy responses. Technically, crude is consolidating after the sharp drop from the peak of 113.28. Resistance is seen near $90 and $92, while support sits around the psychological level of $80. Next up, let's have a look at gold. Gold is trading around 51.77 per ounce after rising more than 1%, supported by a weaker dollar and easing inflation concerns as oil prices declined. While the Middle East conflict continues, expectations of a quicker resolution to the war have limited some of the safe haven demand. Technically, gold is showing a rebound trend, trading along the upper Bollinger Band with RSI around 57. Resistance is near 52.38 with a break potentially targeting 5300. Support sits around 51.12 and 5076. Lastly, let's have a look at the Australian dollar, which strengthened to around 71.50, reaching its highest level since May 2022 as markets increased expectations for another RBA rate hike at the March 17th meeting. Rising oil prices are expected to push inflation in Australia higher, which in turn increases the pressure for a tighter monetary policy. Technically, Australian dollar remains bullish after hitting a three-year high of 71.68. Resistance stands around 71.68 and 72 cents, which is a psychological level, while support is seen around 70.53 and the psychological level of 70 cents. Well, that's all for today's morning market outlook. As always, manage your risk and happy trading.